Welcome to the deep dive. Today we're taking a closer look at UAE off-plan properties. Specifically, could they be a smart investment for 2025?
Exactly. We're basing this on some analysis from Dr. Puyin Gamari. He's a Swiss economist and also the founder of the ALN platform.
Right. And we know you want to get straight to the point, understand the opportunities without getting buried in jargon. So think of this as your essential guide to Dr. Gamari's key insights on this.
hmm We've sifted through his article, focused on the core ideas about why UAE off-plan might be strategic right now. Our mission here is really just to equip you with that core understanding.
Okay, great. Let's jump in. First off, just to be clear, what exactly are off-plan properties and why are they such a hot topic in the UAE for 2025?
Sure. So, simply put, off-plan means you're buying a property before it's fully built. Sometimes construction hasn't even started.
Okay, buying based on plans and promises, essentially.
Pretty much. And the reason it's relevant for the UAE in 2025, according to Dr. Gamari, is this mix of factors. You've got developers really pushing forward with ambitious, large-scale projects.
And the government is backing this?
Yes, significant government support and initiatives are in play. So it creates this environment where buying off plan isn't just, securing a future apartment. It's more about strategic positioning.
Strategic positioning. How so?
It's about timing, really. Understanding the economic foresight, seeing where the urban landscape is headed, and getting in early.
Got it. So, looking beyond the construction site to the potential future value. Now, one of the biggest draws mentioned is high ROI, return on investment. Can you unpack that for us?
Right. Dr. Kamari breaks ROI down into sort of two key phases here. First, there's the potential for appreciation before the property is even completed and handed over.
Okay, so the value goes up while it's still being built.
Potentially, yes. He suggests you could see maybe 10% to 25% appreciation, especially if you buy early in popular spots like downtown Dubai or Palm Jumeirah.
Wow, 10 to 25% before completion. That's significant. What's the second phase?
The second part is the rental yield after you take possession. Because the UAE offers tax-free income, the net rental yields can be quite attractive. He mentions figures in the range of 6% to 10%.
And how does that compare internationally?
Well, he points out that often compares very favorably to many Western markets where taxes can take a big bite out of your rental income. So the net return in the UAE can look better.
That pre-completion appreciation sounds great, but it can't be guaranteed, surely. What makes it more likely?
That's a really important point. No, it's not guaranteed. Dr. Gamari notes it often hinges on things like the developer's reputation. Do they deliver quality on time? And of course, the specific location and overall market demand.
So backing the right horse, essentially. A good developer in a high-demand area.
Exactly. That's where you generally see the best potential for that early value increase.
You mentioned Allen earlier, Dr. Gamari's platform. Did they have any specific observations on this, on the timing?
Yes, their data seems to show a clear pattern. The earlier you get into a project, especially in what they call high-velocity market areas with lots of activity and buyer interest, the better your potential margin could be before completion.
Interesting. Any other tactics mentioned?
He also touches on something called flipping contracts. Some investors, particularly high net worth individuals, might buy the right to purchase a property off plan and then sell that contract onto someone else mid-construction.
Ah, so capturing that appreciation without actually owning the finished property.
Precisely. Though naturally, you need to be aware of any rules, regulations, or fees involved in doing that. It's not always straightforward.
Makes sense. Okay, potential for gains there. But another point that jumped out was low entry prices. I mean, for places like Dubai, that sounds a bit counterintuitive. What's the deal?
Yeah, it does sound surprising. But Dr. Gamori highlights the relative accessibility. He mentions starting prices for some off-plan units being as low as, say AED 280,000.
280,000 dirhams. Okay, that is lower than I might expect for the UAE market.
Right. His point is that this opens the door for a broader range of investors. You might be able to get into good zones in Dubai or even explore opportunities in other rapidly developing Emirates like Sharjah or Ajman without needing, massive capital up front.
So it's not just for the super rich. Were there specific examples given?
Yes, the analysis pulled a few examples from the ALAN platform, like Nest student residences in Al Jada, Sharjah. Those were listed starting from around AED 280,000.
Student residences, interesting. What else?
There was Al Amira Village in Ajman, starting from AED 350,000. And even in Dubai, a project called Nautica in Dubai Maritime City started from AED 1.33 million.
Okay, 1.33 million is obviously a bigger number, but potentially still accessible for a waterfront spot in Dubai compared to, say, completed properties in prime areas.
That seems to be the argument. It's about the relative entry point for that specific type of location and project.
Got it. Different price points across different areas. Now, location, 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 it always comes up in real estate. The analysis highlights downtown Dubai, Dubai Maritime City, and Palm Jumeirah. What makes these areas special for off-plan right now?
So Dr. Gamari looks at location beyond just the address. It's
Ah.
about future potential, driven by infrastructure, lifestyle appeal, and where global money is flowing.
Right. So downtown Dubai, still the heart of it all?
Absolutely. He sees it as the city's vibrant core.
Mm-hmm.
And high-end projects there, like one called Frank Muller Adrenitas, signal continued strength in that luxury segment, suggesting potential for high appreciation.
Okay. And Dubai Maritime City, that sounds newer.
It is. It's being positioned as this new urban zone focused on marine commerce, but also high-end residential. The Nautica project we mentioned fits right into that narrative. It's about creating a new, prestigious area.
Interesting. And the Palm Jumeirah, that's obviously well established.
Globally known, right, for exclusivity. He mentions developments like Como residences there, which cater specifically to that ultra-high net worth client base, reinforcing its status.
So these locations aren't just random dots on a map, they fit into a bigger picture.
Precisely. Dr. Gamori connects them to things like the Dubai 2040 Urban Master Plan, the legacy of Expo 2020, and the ongoing interest from foreign investors. It's not just about the building, it's about the whole narrative and the strategic direction of the city.
That makes a lot of sense. You need that wider context. And you mentioned government support earlier. Let's talk policy. What specific things does Dr. Gamari point to in the UAE that make it attractive for property investors?
He highlights several key elements, things like the Golden Visa programs, which can be linked to property investment, offering residency.
Ah, okay. That's a big incentive.
Definitely. Also, the fact that foreigners can have 100% ownership in designated freehold zones, that's crucial. Plus, the tax-free rental income we already discussed.
Tax-free income is huge.
It really is. And finally, the stability of the currency, the dirham being pegged to the US dollar, that adds a layer of predictability.
And in today's world, with inflation and instability elsewhere, that predictability must be a major selling point.
Absolutely. Dr. Gamari really frames the UAE as something of a safe harbor for capital right now. Investors looking to shield their money from volatility in other regions are increasingly looking towards the UAE.
Makes sense. Okay, let's circle back to Ayland, Dr. Gamari's platform. How does it actually help an investor navigate all this? What's its role?
Well, the way he describes it, Alan aims to be more than just a place to find listings. It's designed as a tool, really, using AI for data insights, providing verified developer information, tracking prices in real time.
So trying to bring more data and transparency to the table, off-plan can sometimes feel a bit opaque.
Exactly. The goal seems to be empowering investors, especially global ones, to evaluate these off-plan opportunities with more clarity and precision based on data rather than just hype.
Useful. Did the source mention how listeners could check it out?
Yes, it provided a direct link for exploring their current off-plan offerings.
Yeah.
It's a .land off plan. And it reiterated some of those projects we talked about, Frank Muller, Nautica, Como Residences, Nest, Alamira Village, as featured listings to look at.
Good to have a resource. And finally, just briefly, what about Dr. Gamari himself? What's his background? Why should we pay attention to his perspective?
Well, as mentioned, he's a Swiss economist involved in real estate strategy and obviously the founder of Aland. His expertise spans global macroeconomics, investment modeling, financial innovation, stuff like that.
So quite a broad base.
Yes. He advises institutions on wealth strategy, digital finance. So he brings his blend of economic understanding, financial tech focus, and direct involvement in the real estate investment space through Aland. It gives his analysis a particular weight, you could say.
Okay, so putting it all together, Dr. Gamari's view seems to be that the combination of potential ROI, both before completion and through rentals, plus those lower entry points, prime locations linked to strategic growth, and very supportive government policies. All this makes UAE off-plan properties a really interesting area to watch for 2025.
That's the core message, yes. It suggests there's substance behind the buzz, grounded in economic factors and policy support.
Right, and it's coming from someone, as you said, who bridges economics and real estate tech.
Mm-hmm. He's looking at it from multiple angles.
So for you listening, the question becomes, do these factors, the potential returns, the entry levels, the locations, the stability resonate with you? How might they fit or not fit with your own investment goals and risk appetite? Something to consider.
Definitely worth thinking about your own
Well,
situation.
and maybe one final thought to leave you with, stepping back a bit. How might these bigger global shifts, economic changes, the way cities are developing, continue to shape real estate investment, not just in the UAE, but in other dynamic regions around the world? It's a constantly evolving picture.
Indeed, the landscape is always changing.